This is your weekly update from the Startup Vagabond. We are in the middle of June, going back the last 2 weeks because we missed last week. So here we go. Across Asia, Latin America, and Europe, investors and governments are putting serious capital behind AI infrastructure, fintech, semiconductors, robotics, defense, space, and climate tech. The easy money era is still over, but if a startup sits close to national strategy, financial rails, or critical infrastructure, the checks are still huge. So let's get into it. Starting in Asia, Kareem moves back to Uber. Uber is buying back a 12.5% stake in Dubai-based super app Kareem Technologies from telecom giant E&, for $100 million. This brings Kareem's non-ride-hailing business closer to Europe, again after E&'s major investment in 2023. It is a reminder that super apps are still valuable, but strategic control matters more than ever. Japan's banks team up across stablecoins. Japan's three biggest financial groups, MUFG, SMBC, and Mizuho, are forming a joint council to launch yen-pegged stablecoins by March 2027. With backing from Japan's Financial Services Agency, this could give Japanese enterprises and Web3 startups a more trusted payment rail. This is not crypto hype. This is the old school banking moving into blockchain rails. Park Systems' big raise for semiconductor tools. South Korea's Park Systems secured 100 billion won, or about $65.5 million, to expand production of high-precision semiconductor manufacturing tools. The company makes atomic force microscopy systems used for nanoscale measurement. As chips get smaller and AI demand keeps rising, the tools behind the tools are becoming a major startup and scale-up story. PayPay lands a landmark $10 billion IPO. Japanese mobile payments giant PayPay debuted on the market at a $10 billion or 1.6 trillion yen valuation. This is one of the biggest venture-backed exits outside the US this year. It also proves that regional fintech infrastructure can still produce a major public market outcomes. Silicon Box raises $150 million for advanced chip packaging. Singapore semiconductor startup Silicon Box raised $150 million to scale its chiplet interconnect technology. The round was backed heavily by EDBI, Singapore's sovereign investment arm. As AI chips become more complex, advanced packaging is turning into one of Asia's most important semiconductor battlegrounds. Innovist gets acquired by L'Oreal. L'Oreal signed a deal to acquire a majority stake in Indian beauty tech company Innovist. The company has built a digital-first, science-led personal care portfolio. For Asia, this is another example of global corporations buying local consumer brands with data, speed, and strong digital distribution. BIPO raises $50 million for global payroll expansion. Singapore headquartered payroll and HR platform BIPO secured $50 million from Apis Partners. The funding will support global expansion, M&A, and embed financial services. Payroll may not sound flashy, but cross-border HR infrastructure is a real pain point for companies expanding across Asia. LUMIQ raises strategic funding for financial AI agents. Singapore and New York-based LUMIQ raised strategic funding led by Bajaj Finserv. The company is building auditable AI agents for banks and insurers through its Lightcone platform. In plain English, this is AI built for financial decision-making where compliance and trust matters. In VC news in Asia, Granite Asia is named APAC's top VC firm. Kinross Research ranks Singapore-based Granite Asia as the top venture capital firm across the Asia-Pacific region. The report highlights the firm's multi-stage track record and regional strength. It is another sign that Singapore remains the command center for a lot of Asia's venture capital activity. Singapore's funding lead gets extreme. Singapore reportedly captured 96% of all startup capital flowing into Southeast Asia in one recent analysis. That shows how strong Singapore is as a safe hub for capital, but it also raises a serious concern. If too much funding stays concentrated in one market, neighboring ecosystems may struggle to grow. Korean VCs quietly enter Japan as LPs. South Korean venture firms are reportedly investing as limited partners in Japanese venture funds instead of rushing into direct startup deals. This is a slower, relationship-first strategy. It lets Korean investors learn Japanese corporate networks, cultures, and regulations before making bigger moves. Singapore climate tech pulls most of Southeast Asia's capital. Traxon data shows that Southeast Asia's climate tech corridor has reached about $1.1 billion in cumulative funding, with Singapore capturing around $872 million. That gives Singapore roughly 80% of the region's climate tech capital. The big picture is clear. Climate tech is growing, but the money is still highly concentrated. Singapore's BIPO deal shows growth capital still moves. Apis Partners' $50 million commitment to BIPO is a good example of what investors still like in Asia: infrastructure, cross-border expansion, and business software with clear revenue. HR and payroll tech may not grab headlines like AI, but it solves a real operational problem. That is exactly the kind of company growth investors are still willing to back. In other news in Asia, South Korea opens the door for global startups. South Korea opened applications for K-Startup Grand Challenge 2026, offering up to 950 million won in equity-free support. The program targets foreign-founded startups in deep tech, AI, and smart manufacturing. For founders looking to enter Asia, Korea is trying to position itself as a serious soft landing hub. Qualcomm backs East Asian AI startups. Qualcomm launched a mentorship and deployment phase of its 2026 AI program for innovators across Japan, Singapore, and South Korea. Selected startups get access to hardware tools, engineering support, patent incentives, and grants. This is a smart move by Qualcomm. Help the next generation of AI startups build directly on its stack. Super AI Singapore sells out. Super AI Singapore 2026 sold out at Marina Bay Sands, drawing more than 10,000 builders, researchers, and investors from 150 countries. The event also featured the $2.3 million Genesis Startup Competition. Singapore is not just hosting the AI conversation in Asia, it is trying to own it. Jetro builds Europe to Asia innovation bridges. Jetro launched its 2026 Global Startup Acceleration Program, creating new bridges between European deep tech hubs and East Asian capital markets. The focus is hard tech, advanced materials, and dual-use electrification systems. This is exactly the kind of cross-border infrastructure that helps startups expand beyond their home region. Singapore adds 1 billion Singapore dollars to Startup SG. Singapore broke into the world's top 10 tech hubs, and added a massive Singapore $1 billion injection through Startup SG equity. The money is focused on deep tech, advanced manufacturing, and cell-cultivated biotech. Singapore is making it clear that it wants to be more than a headquarters hub. It wants to fund the next layer of hard tech. Block 71 and Microsoft launch AI Accelerate. Singapore's Block 71 partnered with Microsoft on the 2026 AI Accelerate Sprint. The program gives enterprise AI startups up to $1.2 million Singaporean dollars in equity-free grant funding. In a tight Series B market, non-dilutive capital like this can be a lifeline. Tokyo IPC launches Launch Asia. University of Tokyo Innovation Platform opened applications for Launch Asia 2026. The program helps Japan Origin University, deep tech, and robotics startups enter Southeast Asia through Singapore. It is another example of Japan using Singapore as a launchpad for regional expansion. Singapore builds Kempong AI. Singapore announced Kempong AI, a dedicated AI hub at One North Business Park. The government is also expanding tax incentives that allow companies to claim major deductions on qualifying AI expenses. This is Singapore doing what Singapore does best: build the infrastructure before the market fully arrives. Next rise. Seoul becomes a major matchmaking hub. Next Rise 2026 wrapped up in Seoul after bringing together more than 540 startups from 30 countries. The event hosted more than 4,000 one-on-one business consultations with major corporates, including Hanwha Aerospace, Renault, and NVIDIA. For startups trying to sell into Korea, this is becoming one of the most important rooms to be in. Korea and Japan are not the same markets. A new Asia expansion audit warned the startups should not treat Korea and Japan as one combined go-to-market plan. The two markets have very different business cultures, regulations, and partnership paths. For founders entering East Asia, this is a simple but important lesson. Local context is not optional. Moving to Latin America, in startup news, Ualá raises $195 million and puts Latin America Fintech back in motion. Argentinian Fintech Ualá raised $195 million at a $3.2 billion valuation. The round was led by Allianz and signals renewed investors' interest in growth stage fintech across Argentina, Mexico, and Brazil. Latin America fintech is not back for everyone, but the leaders are still raising serious money. Clip shocks the market with a $500 million round. Mexican payments company Clip raised $500 million, pushing its valuation above $2.5 billion. This is one of the biggest Latin American startup stories of the period. Mexico's merchant payments and banking rails are becoming a major target for global growth investors. Klar uses debt instead of equity. Mexican digital banking payment platform Klar secured a $100 million debt facility from European credit investors. Instead of raising a traditional equity round, Klar is using debt to scale AI-driven credit underwriting for underbanked consumers and SMBs. This is a good example of fintechs getting creative in a selective funding market. In VC news, Latin America capital is moving to late-stage winners. Latin American venture inflows held up at around $1.03 billion in the recent quarter, but the split is uneven. Big checks are going to late-stage, infrastructure-heavy fintech companies, while early angel and seed fund remains weak. The market is not fully back. It is concentrating around companies investors already trust. QED investors bets on FEMSA's lending arm. QED investors made a strategic investment into FEMSA's digital lending unit. The deal connects QED's fintech experience with FEMSA's huge Osho store network and Spin digital banking platform. This is a very Latin America-style fintech story. Digital finance meeting massive online distribution. Mexico becomes the center of Latin America funding momentum. Mexico has been pulling major venture attention thanks to companies like Clip, Klar, Kavak, and FEMSA's fintech push. The common theme is financial infrastructure tied to real consumer and merchant demands. For investors, Mexico looks like one of Latin America's clearest fintech growth markets right now. In other Latin American news, Latin American early stage market still looks fragile. Even with big rounds returning, early stage funding across Latin America remains volatile. Seed capital is still taking a much smaller share of total funding than it used to. This means new founders may still have a hard time, even while the top companies are raising mega rounds. AI is changing the cost of building in Latin America. Regional investors are watching lean AI native founders teams more closely. The idea is simple. If AI tools help small teams build faster and cheaper, Latin America startups may not need as much early capital to prove product market fit. This could be a real advantage in a tough funding market. Moving on to Europe. In startup news, Robotics becomes Europe's humanoid robotics champion. That's Neura spelled N-E-U-R-A. German robotics company Robotics raised a massive $1.4 billion round backed by Amazon, NVIDIA, and Tether. The funding makes it one of Europe's best funded humanoid robotics companies. Europe is clearly trying to build serious hardware companies, not just software startups. WirePause gets 24 million euros to scale industrial mesh networks. Finnish wireless network company WirePause has secured a $24 million from the European Investment Bank to scale its decentralized mesh technology. While the company is European, the story matters because smart tracking and industrial networks are becoming critical infrastructure. This is one of those quiet deep tech plays that could sit underneath a lot of factory logistics and IoT systems. ICEYE, or ICEYE, hits a huge new valuation. Finnish satellite company ICEYE raised a 450 million euros, led by General Atlantic, reportedly pushing its valuation to around $10 billion, or 10 billion euros. The company builds radar imaging satellites used in defense securities and public sector missions. This is one of the clearest examples of Europe's defense and space tech boom. Legora raises $200 million for Legal AI. Legal AI platform Legora raised $200 million at a $5.6 billion valuation. The company is expanding across European offices as demand for legal automation grows. AI is not just hitting coding and customer support, it's moving into high-value professional work. ONA gets acquired by OpenAI. OpenAI announced plans to acquire Gitpod GmbH, operating as ONA, a German startup focused on cloud-based sandbox environments for long-running AI agents. This gives OpenAI deeper infrastructure for enterprise AI agents. It also shows the European AI infrastructure startups are now in acquisition targets for the biggest US players. CompuV raises seed funding for compliance AI. Legal tech and reg tech startup CompuV raised seed funding at a $40 million post-money valuation. The company uses AI to help companies identify and manage compliance risks across documents and workflows. In Europe, where regulation is heavy, compliance AI is a very natural market. Drooms gets backing from EOS Partners. EOS Partners backed the majority acquisition from Munich-based Drooms, a due diligence and virtual data room platform. The plan is to accelerate Drooms' AI-driven document classification across European markets. Private equity is clearly paying attention to practical AI tools inside legal and financial workflows. Behavix raises $175 million for AI compliance. London-founded RegTech company Behavix raised $175 million from BlackRock's HPS investment partners. The funding retires debt and gives Behavix fresh capital for global expansion. AI compliance is becoming a major category as banks and large companies try to monitor risk in real time. MDA Space buys Blue Canyon Technologies for $620 million. Toronto-listed MDA Space announced a $620 million acquisition of satellite manufacturer Blue Canyon Technologies. This is a major aerospace hardware deal outside the US startup bubble. Startup space infrastructure is becoming a serious global M&A category. In VC news, Pitch Drive closes 60 million euros for early-stage AI. Belgian VC Pitch Drive closed a $60 million early-stage fund focused on pre-seed and seed B2B startups. Even in a selective market, specialized AI funds can still raise. Europe's early-stage market is not dead, but it is becoming more focused. Janus Henderson buys Rantum Capital. Janus Henderson acquires Frankfurt-based Rantum Capital to build a larger European private credit platform. Rantum has raised around 1.2 billion euros across private equity and private debt vehicles. The move shows how much interest there is in private credit as startups and scale-ups look beyond traditional equity. Base 10 closes $850 million for real economy AI. Base 10 Partners closed $850 million across two new funds, bringing its assets under management to $2.6 billion. The firm is betting on AI applied to logistics, finance, and industrial workflows. That thesis fits the moment. Less hype, more real-world business problems. Deep tech mega rounds are becoming the new late stage. A venture market review found that $100 million plus supergiant rounds are becoming more common in AI hardware, quantum, defense, and advanced infrastructure. That does not mean the whole market is healthy. It means late-stage capital is moving towards the companies with huge technical moats and strategic value. Europe's private credit market keeps expanding. The Janus Henderson ransom deal reflects a bigger shift. Private credit is becoming more important for European growth companies. As equity investors stay selective, debt and infrastructure financing are becoming part of the startup funding playbook. That can help companies grow without giving up as much ownership. In other news, the UK wants to become a tech buyer. The UK government is shifting towards a tech buyer strategy with a £100 million sovereign chip fund through ARIA. The goal is to help British deep tech and AI infrastructure startups test hardware and win non-dilutive public procurement contracts. In simple terms, the government does not just want to fund startups, it wants to become a customer. European telecom giants move on SFR. Orange, Bouygues Telecom, and Iliad signed an MOU to acquire SFR from Altice France. This would be one of Europe's biggest telecom and digital infrastructure consolidations. It is not a startup story directly, but it matters because telecom infrastructure shapes the market startups build on. Europe builds a €500 million Southern Deep Tech Corridor. South Summit 2026 introduced a €500 million deep tech funding corridor across Spain, Italy, and Portugal. The program is focused on physical engineering, not basic SaaS. Southern Europe is trying to move deeper into climate tech, advanced manufacturing, and industrial innovation. Horizon Europe adds a €1.25 billion for frontier tech. The European Commission opened its 2026 Horizon Europe work program with more than €1.25 billion tied to Marie Sklodowska Curie actions. Hope I said that right. The program includes opportunities for international partners, including teams connected to Southeast Asia. This is Europe using grant funding to stay competitive and science-heavy startup sectors. GITEX, or GITEX, AI Europe turns Berlin into a capital hub. GITEX AI 2026 brought more than 950 startups and enterprises to Berlin, with access to 600 plus investors managing over $1 trillion. The event is focused on Europe's AI opportunity, especially compliant B2B automation. Europe may be slower than the US in AI funding, but it is trying to turn regulation into a selling point. Nordic and Baltic startups build a Singapore bridge. Startup Estonia and Sweden's Vinnova opened applications for Nordic Singapore Innovation Days 2026. The program helps European scale-ups access Singapore's regulatory sandboxes and APAC markets. This is a smart bridge for companies that want to use Singapore as their Asia entry point. L'Oreal launched its €100 million accelerator program for sustainability for focused startups. The accelerator targets circular economy systems, biological recycling, and green biotech. Big corporates are still a major funding and exit path for climate and consumer tech startups. VivaTech puts sovereign AI on display at VivaTech 2026 in Paris. AWS and NVIDIA launched a startup village focused on Europe's sovereign AI infrastructure. The showcase included startups working on robotics data, secure knowledge sharing, and physical AI. The message was clear. Europe wants AI tools that fit its own rules, markets, and industrial needs. That is it for this week's updates. As you can see, a lot of news, a lot of changes, a lot of acquisitions. The capital is still flowing, but it seems, in my own opinion, to be more of a barbell approach, like we talked about last week or 2 weeks ago, where very, very early stage startups are getting a lot of kind of pre-seed funding. And like we talked about in Mexico, it's becoming more common that the checks are getting smaller for those pre-seed, specifically because of the use of AI. Like, you don't need as much money, so it's just getting cheaper to build that MVP, that prototype, get something off the ground and get it in somebody's hands. But then they're also getting bigger for the more deep tech, university research-backed startups that just need millions more dollars for research and studying and running through regulation and everything else that it requires to do any of this biotech or hard tech kind of hardware startups. So we will see what the future brings for that. But another great week of the Startup Vagabond's weekly updates. So.